Market to Market, July 25th, 2025. Trade deals, farm laws, and commodity analysis. Imagine a world where trade wars and economic uncertainty are the new norm. As the August 1st tariff deadline looms, the stakes are higher than ever. But here's where it gets interesting. Despite the chaos, new trade deals are emerging, and farm groups are fighting back. In this week's Market to Market, we'll delve into the latest developments and explore the potential consequences for the agricultural industry. But first, let's take a step back and look at the bigger picture. The U.S. economy is facing significant challenges, with existing home sales falling 2.9% last month, and orders for durable goods tumbling 9.3%. So, what does this mean for farmers and rural communities? To find out, we'll be discussing the latest news and trends with our expert analysts. And this is the part most people miss: the impact of trade policies on local economies. We'll be examining the effects of Proposition 12, a controversial measure that requires pork sold in California to come from hogs raised with more space. But what about the farmers who are already struggling to comply with these regulations? We'll hear from them and explore the potential consequences of this policy. Meanwhile, in the world of agriculture, there's a growing movement to remove dams and restore natural habitats. We'll be visiting the Kalamazoo River in Michigan, where a dam removal project is underway, and exploring the benefits and challenges of this approach. And if you thought that was all, we'll also be discussing the latest commodity market analysis with Naomi Blohm. From wheat and corn to soybeans and cattle, we'll be covering it all. So what can we expect from the markets in the coming weeks? Will the trade wars continue to impact prices, or will we see a shift in the global economy? You tune in to find out. But here's the question. Are you prepared for the potential consequences of these trade policies? Do you think the benefits of Proposition 12 outweigh the costs for farmers? Let us know in the comments. And don't forget to join us next week for another edition of Market to Market, where we'll be exploring more of the latest news and trends in agriculture. In the meantime, you can catch up on our previous episodes on YouTube and subscribe to our channel for more content. Thanks for watching, and we'll see you next time. Navigating FX volatility, Fed policy, Trump tariffs, and 2025 risk strategies. Warning: FX volatility reaches boiling point in July 2025. Are you prepared? As the world grapples with the intricacies of global economic policy, three behemoths have emerged to shake the very foundations of foreign exchange markets. The Federal Reserve's cautious rate stance, the U.S. jobs data's resilience in the face of tariffs, and President Trump's unrelenting protectionist agenda. Investors and risk managers, buckle up. Navigating this treacherous landscape requires a deep understanding of the interplay between these forces. The Fed's deliberate dance, patience versus market expectations. The Federal Reserve's July 2025 decision to maintain the federal funds rate, 3.9%, 4.4% range, underscored a wait-and-see approach, emphasizing data dependency. However, market expectations, as reflected in the CME Fed Watch tool, signal a 62% chance of a September rate cut. This disconnect has ignited FX volatility, particularly in ERUSD and USD-JPY pairs. Internal Fed divisions, a house divided. Governor Chris Waller's advocacy for a July rate cut to bolster a weakening labor market clashed with officials like Raphael Bostic, who cautioned against inflation risks. This discord has sent mixed signals to currency markets, with the U.S. dollar index, DXY, fluctuating wildly, 102 to 105 in the decision's aftermath. Jobs data, a labor market walking a tightrope. The June 2025 non-farm payrolls report surprised with 147,000 new jobs, outpacing expectations 110,000. Yet beneath the surface, cracks emerged. A shortened average work week, 34.2 hours for private sector employees, and a rise in long-term unemployed, 1.6 million. These indicators suggest a labor market strained by Trump's tariffs, which have driven up business input cost. The wage inflation conundrum. A 3.7% year-over-year increase in average hourly earnings, though slightly cooler than the previous period, has kept the door ajar for delayed rate cuts. The Fed fears unanchored inflation expectations, creating a tug of war between dollar strength and speculative September easing bets for FX traders. Trump tariffs, a double-edged sword. In their second year, Trump's tariffs have prolonged inflationary pressures, forcing the Fed to delay normalization. Paradoxically, these policies have also weakened U.S. trade partners, particularly in Europe and Asia, relatively strengthening the dollar against the euro and yen. Eurozone and Japan, divergent central bank trajectories. The European Central Bank, ECB, has signaled earlier than planned rate cuts, while the Bank of Japan, BOJ, hints at a potential pivot to tighter policy. This divergence has pushed EURUSD to test 1.1 thousand and USD JPY to surge to 150.0, as investors price in the BOJ's potential to follow the Fed's lead. Risk management strategies for turbulent FX waters. Hedging dollar strength. Utilize EURUSD and USD JPY options for downside protection against a potential September rate cut. Safe haven diversification. Leverage the Swiss franc, CHF, and Canadian dollar CAD as attractively positioned safe haven and commodity-linked assets. Monitoring policy divergence. Closely watch the ECB September meeting and the BOJ's August policy review for clues on further rate cuts, which could amplify FX volatility. Investment outlook, navigating the eye of the storm. July 2025's policy landscape is defined by three key themes: the Fed's cautious rate approach, the labor market's tariff-driven resilience, and the geopolitical risks of Trump's protectionism. While the dollar may remain strong near term, the possibility of a September rate cut and divergent global monetary policies create fertile ground for tactical opportunities. The path forward, balancing caution with opportunity. Investors must navigate the Fed's data-dependent strategy and anticipate ECB and BOJ moves to capitalize on volatility. As Trump's tariffs continue to reshape global trade dynamics, adaptability will separate the resilient from the vulnerable in FX markets. The question remains, will the Fed's cautious approach ultimately give way to a September rate cut? And how will you position your portfolio to thrive in this volatile environment? Share your thoughts and strategies in the comments below. Stay ahead of the curve. By grasping the intricacies of this complex landscape and leveraging tools like options, futures, and currency forwards, you can not only mitigate risks, but also seize opportunities in a world of heightened volatility. Fed split, housing crisis, and altcoin surge. July 2025 market update. Imagine a perfect storm brewing in the financial world, where the Federal Reserve's decisions could make or break the market's trajectory. But here's where it gets interesting. The Fed is facing unprecedented pressure from all sides, and the consequences of their next move could be seismic. As we dive into the latest market update for the week of July 25th, 2025, you'll discover how trade tariffs are secretly fueling inflation, why the upcoming FOMC meeting could be a game changer, and what a rare dissent among Fed members might mean for the future of monetary policy. The signs are clear. Tariff-driven inflation is increasingly weighing on the Fed's deliberations, and the late July FOMC meeting could mark a historic turning point. For the first time in over 30 years, a double dissent among board members is being considered, a sign of growing internal tensions and mounting political pressure from Donald Trump, who is calling for rate cuts. And this is the part most people miss. The housing sector is also showing signs of strain, with sales of existing homes falling 2.7% month over month, and the Case-Shiller Index declining for the second consecutive month. This raises concerns about consumer confidence and the potential ripple effects on the broader economy. But what about the crypto market? Ethereum is shining, with ETFs pulling in $1.1 billion this week, as this Friday marks the first anniversary of Ethereum ETF launches in the US. Bitcoin, on the other hand, has paused after recent highs, and the drop in its dominance is fueling an altcoin season, a period favoring cryptocurrencies other than Bitcoin, driven by excitement around potential US ETFs for Solana and XRP, along with renewed interest in more selective projects. So what does it all mean? The intersection of monetary policy, housing fragility, and crypto dynamics paints a picture of markets at a crossroads. Any sign of division within the Fed could inject short-term volatility while reshaping expectations for rates. Weakness in housing, the cornerstone of American wealth, hints at potential strains on consumer spending, while crypto's shifting tides show that investors are already seeking new opportunities. Together, these signals suggest a summer of heightened sensitivity, one where policy shifts, economic data, and asset flows are likely to collide in ways that could redefine the outlook for both traditional and digital markets. Now, we'd love to hear from you. Do you think the Fed will cave to pressure and cut rates? Or will they take a more hawkish stance? Share your thoughts in the comments below. For more news, information, and strategy, visit the CoinShares Crypto ETF.